I had this conversation with a client the other day. The client had heard that we were going to have a cataclysmic meltdown of the market. Well, what do the facts say? The facts don't bear that out. The facts look at the economy and go, okay, things are actually recovering, doing well. We're seeing some growth in earnings. We're seeing some growth in the actual prices on the S&P 500. Are there things to worry about? Yes, there are. But here's the secret. There are always things to worry about. There are always reasons for you to not invest. Scott, I can remember when I first began in this business in the little small office that I had back in El Dorado back in the 80s. I had a chart in the office that basically said there are always reasons not to invest. And this chart charted the market over time, and then every year it was the crisis of the year. Whatever was going on, it flagged what that crisis is. And what you find when you have that kind of perspective, you step back and look at it and you see that, okay, there's always been some reason, some excuse not to put your money in the market, but that excuse paled against the return of the market.
You mentioned the election. I actually had a couple of conversations with folks who were not clients of GenWealth that talked about that they were all in cash riding up to the election because of that same reason, some of those same reasons you talked about. They were expecting a very big downturn right after the November election, and that, of course, did not happen. And I think it's worth pointing out, too, here, guys, that you can't time the market because the market doesn't always behave logically in the short term, right? It does behave fundamentally over the long term, but it can have some emotional spasms that nobody, not even people who like us who watch it every day, can possibly predict that they're coming.
And talking about the crisis of the year, right? I mean, you look at the news and it's the soup du jour, right? It's the crisis of the day. So yeah, we can be very discouraged just about any day when we look at the news because it's always bad. It's always something that's going on wrong, and it's not until later, to our point in the last segment, that we find out about all the gains that certain people took place in, and we don't find out about those until after it's happened.
Scott, I think about separating the wheat from the chaff, and I think that's what good research does. There's always noise out there. And what you have to be able to do is you have to be able to sort through that noise and find the things that matter. Find the things that actually are going to drive the market. Find the things that are actually going to affect stock prices. Find the things that you can hang your hat on. Here at GenWealth, we believe at the end of the day, earnings really do drive the market. Now, there's a lot of stuff that might affect it in the meantime, but over time, earnings drive the market. And if earnings are good, the market is going to go up. If earnings are bad, then the market's going to go down. And that is really what it boils down to.